Hello investors, welcome to Investors Central. In this video, we are going to have a detailed check of 21 points for Parag Parikh FlexiCap fund. Let us begin the checks with the basic details. Assets under management AUM of this fund is 75,956 crores. Parag Parikh FlexiCap has the highest AUM in all the flexicaps in the industry in India. Coming to the expense ratio, 0.63% is the expense ratio in direct mode for this fund. In regular mode, the expense ratio is 1.33%. The difference between expense ratio in direct and regular mode is 0.70%. Coming to the exit load structure, here the structure is little different when compared with other funds. So 2% if redeemed in 365 days and 1% if redeemed in 730 days, that is in the second year. So here the exit load is little strict, and if any retail investor want to redeem his money in the second year also, because of some liquidity emergency reasons, he cannot do that, because he can do that, but he need to pay 1% exit load for exiting from the fund. So this is a drawback I feel this fund has. Coming to the fund manager, Mr. Rajiv Thakkar is the fund manager of this fund since inception, that is from 2013, and no change in the fund manager since its inception in this fund. Coming to the risk measures of Parag Parikh FlexiCap fund, the fund has lower standard deviation than the benchmark, which is very good. Alpha is more than 1 and it is at 3.71 for this fund. Another good thing is here. And beta of this fund is 0.72, which is less than 1. So volatility in this fund is also lower. Coming to the Sharpe ratio, which is a risk adjusted return measure, here also the fund has good Sharpe ratio at 1.19. Coming to the UCR, means upside capture ratio, this fund has not above the par level. So normally upward capture ratio should be more than 100, but this fund's upside capture ratio is at 90 only, but downside capture ratio is extremely good. Friends, if you want less risk from an investment, then this is a good option, friends, but it cannot capture upward moves well. In the last 3 years, based on last 3 years result, this is the upward capture ratio. So if it is more than 100, it can beat the benchmark, but here the upside capture ratio is 90 only in this fund. Coming to return metrics of Parag Parikh FlexiCap fund, in 1 year return, the fund has not beaten the benchmark, but it made returns to investors almost par to the benchmark level. But in 3-year period, 5-year period and 10-year periods, the fund has outperformed the benchmark, especially in 3 and 5 and 10 years period. The fund has given extreme outperformance. At 10-year CAGR of this fund is at 19.29, and benchmark has given only 15.19. So 4% extra for 10 years compounded value is the extra return we got from this fund. Coming to the outperformance in last 10 calendar years, that is from January to December, 7 times the fund has outperformed the benchmark, while benchmark has outperformed this fund 3 times in last 10 calendar years. Coming to the portfolio basic checks for this fund, Turnover ratio of this fund is only 28.33%, which is extremely good. Means there is low churning in this fund. Global diversification is available. This fund has investment of stocks in USA and Japan as well. Coming to the portfolio price to book value, the ratio is 3.74%. So 3.74 is the extra amount we are paying than the book value of the companies invested in this fund. Coming to the portfolio P by E, it is extremely good, friends. 19.09 is the price to earnings ratio of this portfolio. For Nifty 50, the P by E ratio is at 24. For this fund, P by E ratio is 19.09. So friends, we are paying less price for 1 rupee earning than Nifty for this fund. So that is the portfolio P by E of this fund at 19.09, which is good. And coming to the allocation of the stocks, large cap exposure is more in this fund. Almost 87% is large cap in this fund. Remaining 12.2% is mid cap allocation. And coming to small cap, which it is at very lowest at 0.87. See, when I am investing in a flexi cap fund, I would like to have some small cap exposure also, so that I could get more returns from my investment in flexi cap fund. But if you are investing in this fund, you are getting largest exposure at giant and large companies at 87%, and mid cap exposure is only 12.2%, and small cap is almost 0.87, not even 1% exposure we are getting to small caps. Coming to cash holding as of now is 15.33%. Friends, investments in the fund, in which cap the fund manager is investing and how much cash they are holding, these are completely dependent on fund manager. So he is doing successfully. He is successful in managing this fund this way since many years, almost 10 years return also we have seen. So our view is neutral on this. That's why I kept a neutral symbol there. I'll show you all those symbols, total results, everything. See, if we see here, I am satisfied with 16 points and 3 points neutral. 2 points I am not satisfied, which is exit load and upside capture ratio. And thanks for watching the video till the end. Request you to recommend any changes we can do to improve this 21 point checklist, and hit the like button, share and subscribe with you. Hope you have enjoyed the video. Thank you. See you in the next video.